I just wanted to say hello, Cornell family. I'm so happy to be here. Even though it's virtually, I hear that Ithaca's weather is pretty nice, and I will definitely come and see you guys in person one day.
Good, excellent. So Tammy's the founder and CEO of Basis Investment Group, and perhaps most importantly, she happens to be a Cornell classmate of mine from 1987. I don't think we knew each other, although we were in the same major for a very short period of time when we started. Um, so we're going to jump right in, Tammy, and have a fun conversation. There's about a little over 100 people, which is super. And again, for those on the chat, or I'm sorry, for those participating virtually, you can throw your messages in the chat or your questions. I'll be looking up to the chat screen. I just want you all to know that's the reason why I'm looking up, not for any other reason. So let's get started. And again, it's not every day I get to interview and have a chat with a classmate. It's kind of exciting for me. And we'd like to start these interviews with some basics. So let's just get to that. So where did you grow up? And tell us a couple of interesting nuggets about your pre-college years and then how you actually chose and ended up at Cornell.
Sure. So first of all, before I answer the question, I just want to say how proud I am of Cornell for having something like the Cornell Entrepreneurship Network. I mean, when I was there, Zach, when we were here in '87, nothing like this existed. And this is such an amazing resource. And so I couldn't say no to being a part of this. But so I grew up from really humble beginnings. I grew up in a place called South Jamaica, Queens, which is an inner city neighborhood. I grew up in a 2-bedroom apartment, get this, with 8 people. So definitely going to Cornell was a major, major culture shock. I am the first female in my family to attend college. And my story at Cornell is not super exciting because I actually followed my older brother who went to Cornell, and Zach, you'll love this. He was at the ILR school. And when I was in high school, I was all about science and math. And I was in this science and math academy at Jamaica High School, which is also in Queens. And I thought I was going to become Dr. Tammy. That's what I often say to people. And when I got to Cornell, I don't know, I hope somebody has this story other than me. I took that organic chem class and just didn't feel it. I just
Wait, was that Chem 207?
Yeah, Chem 207. Yeah. But we'll use that word. And you know what? And it shook me. It shook me to my core. And I guess I should have stuck with that. But at the same time, I took our econ class, and I did really well. And I was, realizing that I could use sort of math in economics, and I kind of was interested in the business side, and I sort of fell into that major, and the rest is history.
That's awesome. It's actually kind of funny because I remember distinctly classmates taking that Chem 207 course, and it was like the cause of anxiety through the roof.
Yeah, and what Cornell taught me, and I literally say this now, and all of us should think about life experiences that kind of connect to quotes. But what Cornell taught me, even at that time, was get comfortable being uncomfortable, because opportunity lies at the edge of your discomfort. And so opportunity did lie at the edge of my discomfort, because I went into economics. I really loved it. And I focused in banking and finance. You remember, Zach, how you could pick sort of a monetary focus, and so banking was mine. And then I took a class at the hotel school, and the class was hotel finance. And, I'm a big believer that things happen in your life that actually lead to things in the future, and you may not know it. So I learned about cap rates, and this is, in real estate, I learned about IRRs. And I don't know that I was, I certainly at that time had no interest in investing or going into the whole hotel business, but I took that class and I remember really liking it. So we'll talk more about that and how that came in. But, Cornell, for me, that experience was transformational, coming from the hood.
Actually, so did you take that class as a sophomore? Do you remember? I'm trying to figure out when you had the epiphany go off. Oh, I want to be in commercial real estate.
Well, no. I still, even though I took that class, I'm just saying it wasn't really, there was no epiphany, because we're going to go further in my story. I just think that things happen that ultimately you draw upon. I just took that class as an elective because it kind of had a financy element, and then economics was very theoretical. So I decided to take that whole hotel class, and it's amazing how that helped me later in life. But what I meant about that quote, just to go back to that for 2 seconds, was Cornell was transformational for me. It was culture shock. It was all those things. And it caused me to be uncomfortable because I wasn't the smartest. I didn't see a lot of people who looked like me, but it was also a significant opportunity because post-graduation, Cornell opened a ton of doors and the network is super powerful, but I had to go through that discomfort to access the opportunity.
Absolutely. So continuing on the educational path, so you also went to business school at Georgia State. Was that right after Cornell? Was there some time in between?
Well, I went to work for, and I'll just tell you, I guess we're going to get to this, but it kind of relates to this answer. I actually, when I graduated from Cornell, I honestly had no idea what I wanted to do. I was an economics major. I knew what I didn't want to do. I did not want to become an economist, and I certainly wanted something in business. So I actually went to work for a company called Equitable Life in their financial management development training program. And that was a great program because for someone like me, and I'm sure there's someone out there that was like this too, it allowed me to work and basically audit different roles across the Equitable enterprise. So I was at the Equitable Life Company. They owned an investment bank. I did a stint in a rotation in the investment bank. And then I did another rotation in their business planning office. And then I got to this place called their real estate investment subsidiary that was actually in Atlanta, now the Georgia State connection.
Okay.
And I loved it. It was literally, I could use some of my supply and demand because, investing in real estate is all about location and demand drivers. And I love, I'm a visual person. So I love the tangibility of that asset class. And so I decided that I was going to stay in Atlanta, and I pursued my MBA because, in my career, I always felt like I had to be better, stronger, faster. I watched who was, rising to senior ranks at the firm. And I saw most of and they were white men, had masters. And I was just like, you know what, I'm going to get my master's. And I did, at the time, Georgia State was one of 2 schools in the whole United States that had MBA programs, the concentration in commercial real estate.
Really?
And and NYU at that time.
Yeah.
And so I went at night. I was working full time, had a child, went at night, excuse me. I was talking about allergies earlier.
Yeah.
And the rest is history. So it's a great program.
So you're we hear about these stories. So the mom who has a kid working full time, goes to school at night, gets her MBA. I mean, we hear these stories often, so it's not like it's unique, but it's always inspiring, right? It's just, I think it's like the untold story. And then what happened after business school? Like, did you then stay with Equitable? Did you?
I was on the equity side, commercial real estate equity side, investing in, office buildings, multifamily properties, industrial, all the main food groups, hotels, on behalf of very large public pension plans. And then I went to work for GMAC Commercial Mortgage, and we were investing the capital of GM's pension plan in mainly credit strategies. Mm-hmm. And then I went to work for yet another public pension plan in one of their subsidiaries of the Case Depot called CW Capital, and did a lot of, credit, mezz, preferred equity. And that was my institutional training. So I spent a lot of my career working for, very large institutions. And it was great because each piece of my career, I can say Equitable, where I started my career, prepared me for working for GM, which initially I was, leading a small group and then a department. And then I went to work for CW Capital and led a platform. And so each thing prepared me for the next, getting skills, learning, and being institutionally trained and credit trained, which I think really helped, when I decided to make the leap to go out on my own.
And were you recruited out of Equitable by GMAC? Or were you looking for something new and you?
Yeah, I was looking, and it's a great question because I liked Atlanta, and 2 of my siblings, I told you, 8 people in that 2-bedroom apartment. So I have 5 siblings and my parents. And so 2 of my siblings followed me to Atlanta. And I liked it, but I just felt like a transplant. I just didn't feel like, I'm from New York. I felt like I
Yeah.
needed to be back, where in the Northeast. It was the South, and there were some things that weren't great for my career as a Black woman, to be honest.
Yeah.
And so I started looking to figure out how to make my way back up north. And then I found a really great role at GMAC Commercial Mortgage. And it's so funny because my two siblings are still in Atlanta. Couldn't get them out.
and, and GMAC was based back in New York City.
Well, now, I'm sorry, say it again. I couldn't hear you.
GMAC was for you is based in New York City.
For GMAC, for me, they were headquartered in a place called Horsham, Pennsylvania, which was
Okay.
getting me close to up north. But then
Yep.
they had a division in New York
Okay.
and Manhattan that I worked for.
Gotcha. So you got back to your roots.
Got back to my
And then you had that other job. And then when did you start Basis?
Okay, this is going to tell you about the kind of personality I have, entrepreneurs who are listening. In the great financial crisis, 2009.
Wow. And which is actually, I mean, not unusual to start things when there is a downturn, because
That's right.
it makes sense. Maybe you could go into a little bit what was your reasoning and what was your motivation to actually start it? Like, were you tired of working for somebody else? Did you just feel you had enough skill and drive to do something, or did somebody in particular inspire you? I'm
So
curious.
all of the above, because it's
Okay.
so you've talked to a lot of entrepreneurs. Well, I'll start with one.
Okay.
You have to have that entrepreneurial spirit in your belly. It's not for the faint of heart, because
Right.
as an entrepreneur, you take a lot of rejection. So it was in my spirit. I've always been that, hustler, entrepreneurial, even kid trying to sell things and do things. And so number two, I like to do things my way, obviously collaboratively, but my CEO, who I reported to at my the firm CW Capital, would always say to me, "You're not the CEO," jokingly, and he's still one of my dear friends and mentors. And I think so that those were two reasons. But the other thing for me was I could never see myself in the C-suite of any of my firms. I'm sorry, I see myself near the C-suite, but as the CEO said more directly, of any of these large firms that I work for, because I saw no one who looked like me. And so I realized that I needed to create my own role. And so that was the impetus for me stepping out, was to realize that if I actually wanted to do things the way I wanted to do them. And I also felt, and this is not to sound arrogant, but I was very profitable in the divisions that I led. And I realized that I could do this on my own if I had the courage to do it. And I'll just tell you the story. In the great financial crisis, I didn't lose my job like many people did. A lot of people were fired and had no choice but to figure out how to create themselves. I was pretty much told, kind of stay on the bench. We're going to get through this. And I just have this type A personality, Zach, where I started writing a business plan because I couldn't sit on my, laurels doing nothing. And I remember I was reading this book called The Alchemist. I don't know if any of you read it, the adult fairy tale by Paulo Coelho. And there was a quote that hit me, which said something like, I'll mess it up a little bit, but the only sure way to not achieve your dream is fear of failure. And I realized I was scared. Like, I had all the knowledge. I had an idea, which was to follow the money, to focus on buying mispriced assets, which turned out to be right. We were profitable our first year. I wrote a business plan, and I had access to this amazing network of high net worth family office folks who I had financed and invested with for years. And I literally made a list of the top 10 investors, family offices that I knew, the patriarchs. Most of them were patriarchs. I think there was one woman. And I got down to number 7, which means I got a lot of no's on this great business plan that I thought was amazing.
Yeah.
And then number 7 gave me my first 100 million. And today we have invested and loaned over 4 billion in 47 states, 450 deals. And what Basis does is we invest and lend across the capital stack in assets, and everything that we do is collateralized by commercial real estate assets. So it can be the food groups that I mentioned: office, multifamily, industrial, retail, and hotel, and some mixed use. And we do debt and equity. So we are really a diversified play. And we manage capital for some of the biggest public pension plans in the United States. Some of our investors, include, this is public, New York City, New York Common, Texas Teachers, those types of household names, some sovereigns. And we are also a lender, and we work with some of the agencies like Freddie Mac. So really the vision was to create this company that could invest and lend and be nimble across the capital stack and be resilient in times like COVID. And having all this diversification, for those of us who understand geography, diversification, property type, position in the capital stack, really worked well during COVID because the portfolio held.
In the capital stack, I think we should, I know what it is just because I'm a VC,
Yeah.
but define that for our audience when you say capital stack. And I'm assuming all these investments are in commercial real estate in different verticals within real estate.
Correct.
Right.
So the capital stack, when you buy a piece of real estate, you typically buy it with debt and equity, right? And so making sure that we invest in some, what I'll call credit or debt investments. We also invest on the equity side. So we are an allocator of capital. So we, by way of example, on the equity side, we would back an operator. Say you have a multifamily operator who's in Atlanta, and they need an LP investor, and we would typically give them 90% of the LP equity, or the equity in the transaction. They put up 10%. If we're investing on the credit side, then we might do a senior mortgage, or we may do what we call a mezzanine debt piece, or a preferred equity piece. So we're really nimble, and we're able to invest where we want to invest to maximize returns for our investors.
Right. And are all of your investments into specific projects, like a new apartment building or a new office building,
or portfolios, but they're definitely discrete investments. And we manage, I'm a private equity fund. So we have some of our capital, and you guys have heard of that, similar to venture capital funds, but it's the targeted strategy would be commercial real estate equity. And then we would use that capital to go in and back different owners and operators across the country. If it's our fund that's on the credit side, then we're doing senior mortgages, maybe on a value add play, which where people are trying to reposition a property and take advantage of, making improvements to increase rents. Or if we're doing, something where it's a development deal where we are building to core because we love the opportunity, the stuff in the market's overpriced. We think that developing is a better way to get returns. We do that as well.
Cool. And I forgot to ask this, but when you decided to form Basis, did you do it by yourself? Did you have co-founders?
So when, no, you didn't, you asked this, I think, or we talked about this. I had one investor, remember the number 7?
Yeah.
And they became my GP sponsor, a great investor, but I own the majority of the company.
So how many employees do you have now at Basis?
We're about, and we just made 2 hires this week. I think we're over 45 employees. Yeah.
Okay. And was there a person who was there at the beginning with you? Besides, was there anybody you would call a co-founder, or was it just?
Well, I wouldn't call anybody the co-founder other than my partner that is my But I will tell you, I'm so proud of this. My senior leadership team and I have worked together for 20 years. So they were with me at GMAC, they were with me at the Case Depot, CW Capital, and which is great because we've invested and loaned together through multiple cycles, and that's a lot of what our investors like too.
Right, absolutely.
And of course, we brought in new people because you have to. I believe in diversity of thought, and I think you have to bring in other thoughts and ideas to always be better. But that, I think that's unique about Basis.
And how is Basis done? A bunch of people ask this question as well. In terms of, I don't know what you can disclose.
I mean, I'm very proud. I told you the amount of the volume of transactions that we've done, which is what I'm very proud of. And without going into too much detail, we have been told that we are top quartile when we look at us compared to our vintage year and compared to other people who do what we do. We have not lost $1 of capital for our investors, and we've achieved our returns. We're doing well. I mean, obviously, I say that, and we're still in the middle of a pandemic, and I'm one of these people that doesn't like to get out over her skis. But I'm very proud. We have a very strong track record in what we do, and I'll leave it there.
Okay. I think everyone understands. So you mentioned the pandemic, and a lot of people have asked this about this on the Q&A. Let's just talk about New York City in particular, because now I haven't been to New York since last March, and I usually go 4 or 5 times a year. In fact, today I'm in the office for the second day in a row at Cornell. It's just not wearing a mask because we're vaccinated and everything is pretty good here. But I have not been to New York. What is the recovery, the real estate recovery in New York looking like to you?
So, first of all, I'm a believer in New York City. I am a New York City girl, and I know that the city will come back. That said, it's going to take some time. And I do think that we are witnessing the transformation of office, and there is still some uncertainty about what that exactly looks like. And it could look like hybrid, which means that various offices will begin to have less utilization of the same office space. So it could lead to office space demand being not the same. And some people don't believe that. Some people think, and there are companies that say, we believe that with innovation, you have to be in the office, 5 days a week. I can tell you that if you look at some of and we're involved in a lot of different, studies on this, and you will see that there is going to be some percentage of people that will come back to the office every day.
Right.
Some percentage will be hybrid, and some percentage will be remote. We just need to give some time to see where that shakes out. The pandemic also caused, headwinds and pressure on rents across asset classes, across property types. So that needs to recover. We still have unemployment where people need to get back to work. We now have, we have a deficit problem, at the federal level. We have municipalities that are struggling. We have taxes where people have migrated away from places to get a better quality of life and to avoid taxes. So that migration, it's yet to be seen, where some folks migrated to the middle market, to places like Denver and Salt Lake and Austin. Will they come back? I don't know. So that to me that's where the opportunity is, because you need to follow the migration, follow the population growth, understand the dynamics with respect to unemployment and kind of where those centers of employment are. And so back to the question about New York City.
Yeah.
I think that New York City will recover. I am not a believer in it happening overnight. And I think that even as it recovers, there's still headwinds on rents, and there are some valuation concerns, because obviously if you're underwriting a lower rent, it's going to result in a lower value. And so we have to kind of work through that. But I do think that as we get shots in arms, people begin to feel like normalcy is happening, restaurants are open, Broadway's open, the city's feeling like the hustle and bustle is back. And I think ultimately it will recover. But I do think that it's not a slingshot, like some people said in the very beginning. And I do think that different areas will recover more quickly than others. So I think geography is going to matter. And I also think that companies are going to have to compete for talent in New York too. And they're going to have to make decisions about quality of life for people, particularly some of the younger folks.
Yeah, absolutely. Particularly in banking, investment banking.
Exactly.
So it sounds like COVID wasn't bad for your company.
Well, I mean, I feel like it was bad for all of us, right? Like,
Well, yeah, I mean, it was, but like in terms of you must have mitigated the risk either knowingly or unknowingly somehow.
Well, I think the key to what helped us survive and be resilient in COVID had to do with this diversification play, as you pointed out. We had very few hotels in our portfolio. So hello, hotels are the businesses that are priced daily. So they got hit the hardest. Now I'll kind of describe this as the way we looked at the portfolio when we triaged in March and April of 2020. We looked at what was most vulnerable to COVID, right? And most vulnerable were our hotels and even our student housing. We had a few student housing deals because universities closed, and initially those deals did not do well. meaning they, for a couple of months. But what Basis focused on, in addition to the geographical diversification, was I had this thesis of workforce housing. I believe that there's an affordability crisis in America in housing. And so we focused a lot of our investing and lending on workforce housing. So that happened to be a very resilient asset class in COVID. The other place that we focused, and I had a couple of people raising some brows initially, because prior to COVID, what was going through the transformation? Not office, but retail, right? Because of e-commerce and all these different things. So Basis had a strategy of focusing on drug and grocery anchored community centers in neighborhoods that were growing. So think about COVID. Hello, food and shelter. So workforce housing and drug and grocery anchor centers. So our portfolios did really well.
Yeah.
And so and that's not all we do, but those were some of the highest percentages. And then we had some office, but we invest in the middle market. So we weren't in any of in any meaningful way, any of the gateway markets that were getting hit hardest. We were in the places where people were migrating. So we saw, of course, you saw dips and things, but we didn't see the issues that some other folks saw. And I think it was diversification. It's also the position in the capital stack we talked about. We weren't necessarily all equity. And those were the mitigants that we had in being able to structure our deals. And so, I'm not going to say we had the perfect portfolio, but I feel really good about, how we fared and kind of where we are today.
Right. But obviously, you planned, let's stick to the food and drug outlets. So you planned that strategy before COVID. That wasn't all of a sudden, oh, COVID, you planned it before. And it's funny because one of the few places that people felt comfortable, maybe by necessity, going to
were those centers.
Was the food store. Wegmans has been crowded ever. It was crazy. Obviously you know this because things were selling out. So
yeah,
that's actually really fascinating. So it was almost like a little bit of serendipity in a way. Is it recession proof? Yeah, food and drug, I guess, is recession proof.
It was also Amazon proof, because my theory, I would love to say that I saw the pandemic coming and I went and did that. No. But what I did see was, everybody hates retail, right? And I said, but within that vertical, it's multidimensional. Is there anything that is less Amazon proof, more Amazon proof than something else, right? We saw malls weren't, right? Malls are going through a transformation, and some of them are being converted and rehabbed into housing, by the way. And so I said, the drug and grocery anchored centers, grocers, for sure, you can get groceries online, and that's okay. And that's why, another thesis we have is, we're very interested in cold storage. We're watching that supply chain. But people still were going to these community centers because they were getting out, and the grocery stores were packed. Sometimes people don't want to wait till the groceries come, or you don't feel like doing that online.
Or they want to pick their own produce.
They want to pick their own produce, or you want to go to the nail salon, or you want to go to the cleaners or the UPS place or the Starbucks. And so we decided to really focus on that opportunity set, and it really held up because it really was not only more Amazon proof or less vulnerable to Amazon, but it also became pandemic proof.
Right. That's fascinating. I want to take a question from the audience. Can you lay out a few of the key factors that you guys diligence and evaluate in terms of setting valuations for investments?
Sure. So, we have a very consistent approach to investing in anything that we do. And so the first thing we do is within, we have a return target. So we're going to look to see that if it meets our quality, criteria, which if we're looking to do workforce housing, we may not want to be doing what they call C+, which is, dilapidated, but we may want to say, if we want to do, let's just say we're going to do B+ housing, and we want to, convert that, or B housing to convert that to B+. So we look at quality. Then we're going to look at, obviously real estate is about, and for us, it's about who's the operator, who are we partnering with, right? You can have a great asset and the wrong partner who's operating it, because Basis is not an operator. We are an allocator of capital. We back best in class partners. So who you're being doing the transaction with a partner.
And you're talking actual people, right? Like
People,
yeah.
actual people.
Yeah.
So and then we're going to look at, as I said, our return, targets. We look at the market. What are the demand generators? We look at rent growth. We look at population growth. We look at employment growth. We look at absorption. Is the space, if there's new supply, is the space getting absorbed? And then we come up with our assumptions on our discount rates, because we do a 10-year analysis. We look at our assumptions on cap rates. We do what everyone does in businesses. We look at comps, right? So, and we come up with what are some comparable same vintage years as the assets that we're looking to invest in or lend on. And then we come up with what we call the basis valuation, which is all of those things in a pot, right? To keep it simple. And then we are usually more conservative than the operator or the owner or the borrower, because they have these grand plans that they're going to grow rents by X, and we'll dial that back. We also look at expenses, right? Because you can't just look at the revenue, you look at the expenses. And is this operating, in line with the expense comps that we have received for that particular area? And then real estate is all about location, right? What is going on in that area? What is generating demand? Who are the employers? Is it like in Utah? I think of Salt Lake City. It's now the Silicon Slopes, right? There are tech companies moving there. You look at places like Austin. 10 years ago, you may not have been as focused in Austin. Where are people moving? What companies are there? What industries are there? Is a diversification of industry? And all of that goes into the pot, the basis pot, to determine whether or not this pencils out. And if it does pencil out, we say, okay, this return, and every deal's different. We may want, a 15% IRR, right, on something. But some other deal that's, ground up construction, we may want 18. So really, it's a risk-adjusted return approach. How much risk are you taking, and are you, getting what you think is the appropriate return for that risk? And we're making sure that we're protecting our investors by investing in things that we believe in. So
yeah, and do you find yourself able to invest in the same operators repeatedly?
Yeah, and borrowers. Yeah, we have a lot of repeat business where, in fact, we're doing a deal in New York. Can't say which deal, and this will be our third deal with this particular developer. It's a development deal, and I'm super excited because I love the location. We know each other well, and we're moving quickly to be able to transact on this. And those are fun deals because you kind of know each other's hot buttons. You've already been through the dance before, and so I like that. And I also have a focus, if anyone's looked at my profile, where I invest and lend with other minority and women-owned businesses. It's part of what we do. We invest with everyone, but Basis has closed about 800 million with other minority and women-owned commercial real estate and multifamily operators and owners across the country. And so I always get very excited when I'm helping somebody else become an entrepreneur.
Right. So let's talk about the minority challenges a little bit.
Sure.
So I'm betting that commercial real estate sector has probably fewer women than even venture capital, and venture capital doesn't have that many, as you know. By the way, my partner in my venture fund is a big real estate developer in Ithaca. So, and the Ithaca market's booming. I mean, it's really.
You need to introduce me to him. You said
I will. I will. Absolutely. He's a wonderful guy. So anyway, so do you feel that unevenness being a woman in commercial real estate?
Yes, my entire career. It's interesting and sad. I can honestly tell you that I think things have gotten worse.
Really?
Rather than better during my career. I think this last year of wokeness has people doing a bunch of stuff and talking about it, a lot of things that I think are good. But I will tell you that just look at the African Americans, not in real estate, but that are CEOs of S&P 500 companies. There's like 4, and I think it was 3. It went down to 3, and then I think it went back up to 4. But whatever it is
it's
too low. Because, out of 4, then that, what is the percentage of mainly white men? It's very high. Right. In real estate, the problem is definitely real estate is a legacy business. It's a closed network business. And it really has not been welcoming to women and minorities, and particularly, African Americans and Latinx folks. Our percentages are very low. And if you think about like assets under management for even, public pension plans, African Americans manage about 1.3% of the trillions, right? And so that's really, and that's across all asset classes, but it's still really, really egregious. And so for me, I've always felt, and I said this earlier, and I guess it's my kind of phrase for today, I had to be better, stronger, faster than everybody else. My key to sort of making a way in the institutional world was to outwork everybody, right? And to make sure I had the credentials to outwork everyone, but always never, feeling sometimes like I fit in, right? I certainly, I can tell you story after story, Zach, where I literally, it was clear that I thought it was clear that I was the senior person, and people would ask me for coffee.
Yeah.
Like, what? And so you have to be gracious, and you have to, you have to make it known that that's not appropriate, but you also don't want to blow up a meeting. That was hard. I've had people I've been passed over for promotions. So you name it, there were things that were difficult, but I guess, at that time, when I was still trying to figure it out, I let it propel me. I let it make me feel, that energy that you said, you know what, I'm gonna continue to forge forward. And for me, it really was important when I founded Basis to create a firm that is 78% women and minorities. I told you we invest 800 million with other minority and women-owned businesses. 50% of our vendors who we do business with, who Basis does business with, are women and minority-owned firms. Why is that? If I can do it, why can't the rest of those firms? Right. It's because I'm intentional. It's because I have a diversity business plan. It's because I actually care about it. Yep. And I didn't just start caring about it, last year. I've been doing this from the beginning. And so what I'm really happy about is during this whole change or reckoning or recognition of, systemic racism across many industries, I have made some really good strides in my role as chair of Real Estate Executive Council. I think I mentioned that to you. It's in my bio, which is the preeminent professional trade organization for African American executives and Latinx executives in commercial real estate. And we have been meeting with CEOs across the country, and we're working on diversity, not just from early stage pipeline, because we have a summer program that actually Cornell is one of the 9 schools, it's Cornell, Harvard, NYU, where we're bringing African American and Latinx high school kids virtually to the campuses for 2 weeks to just immerse them and give them a commercial real estate immersion through middle management and through board service. We're going to talk a little bit about that, but making sure that in this continuum of diversity, that we are firing at every place that we can, all cylinders. Because what I think has happened historically is that people get excited about going to the HBCUs and getting a couple of interns, and then they realize that those interns leave because guess what? You can't be it if you can't see it. They don't have any retention policies, and they're not really focusing on the problem. So we've been partnering, Reese and Basis have been partnering with other majority firms to say, you have to recognize you have a problem, and you have to start somewhere, and you have to do it differently. And the biggest change I will tell you that I'm seeing, which I think is positive, is that we're coming together. Because if you try to, accomplish this as silos, we're going to have the same result. We already see that doesn't work. Right. So I'm
more division.
Yes, absolutely.
An interesting comment just came in, and I'm just going to read it. It says, this is from JB. He says, I would say that real estate can also be predatory against minorities and minority women as consumers, possibly because they are often in historically redlined areas. But there are stories of high-profile predatory landlords that destroy their credit just because they can.
Yeah.
Yes.
I mean, there's a lot of history that we can go into. The reason why we have the wealth gap, where from the most recent Federal Reserve report, an African American family has a net worth of 17,000, and a Caucasian family has 171,000. The main driver in the difference in those balance sheets is real estate. And why is that? Well, we had the GI Bill that lifted, veterans and African Americans and other minorities are largely excluded. And we had, redlining, right? And so the asset that most people use to create wealth, to pay for businesses, to go to college, would be their homes. And so
Right.
absolutely. And so my parents never owned a home. Imagine that. Imagine here I am. And I'm so blessed and thankful that I had the journey that I've had, because I had to learn this myself, right? Through, access to opportunity. It's about access to opportunity. So the question is definitely spot on, and or the statement that yes, it's about access to opportunity, education about stuff. I don't think my parents understood everything they needed to understand, but they also didn't have money. So when real estate is capital intensive, right?
Yeah.
I don't have an uncle that has $1 million hanging out in his bank account to give me to start a company. That was blood, sweat, and tears.
Yeah, absolutely. I want to switch gears for a second. A lot of people have asked about technology. Generally speaking, how will technology, and I want to include in that Bitcoin, or I'm sorry, blockchain, by the way.
Yep.
Do you see technology infiltrating real estate? What are your
Yeah,
trends?
well,
What are
first
the
of
trends
all,
that you're looking at?
so first of all, real estate is so sleepy. We are like the last to do anything. It's sort of this asset class that hasn't been as, up to date on changes. And so it really does need a shot in the arm. And I'll just say something on a side note. I'm on the board of a public company called Crown Castle. And the reason why, and they're a digital infrastructure REIT, real estate investment trust. And so what I love about it is it allowed me to marry my real estate experience with technology and sort of the cutting edge things that, understanding how cell towers, which actually power all of our cell phones, and,
Right.
how that intersects with real estate. So I do see that there will be smart buildings. I'm just going to break it down from the more basic things. We have a lot of discussion about ESG, environmental, social, and governance, that hopefully you guys will study and learn, because it is the way of the future for investment. When you think about smart buildings and green buildings, technology is going to help drive that. When it comes to, blockchain, it's already in real estate. I mean, people are talking about it's going to change the way mortgages are recorded, and it can actually create a system that is more democratized, where you can have more access, because you can actually and create more liquidity, right? Because real estate's illiquid. That hasn't happened quite yet. I think people are still, it also you have to have behavior that changes and follow suit. And right now, the real estate's owned by a lot of folks that are in a generation that hasn't accepted that. So I think that it's going to take time to evolve. And as those technologies are more refined and we start to see other industries create success, then I think it will affect real estate. It'll affect jobs. Like, lawyers will still need lawyers, but their role may be different. They may be reading something differently. I'm just, and again, I don't know if it's specifically lawyers, but, title companies, the way we close deals, how we hold title, how we transfer, how we sell. Maybe people can buy fractional interest in things. I mean, there's so many possibilities that are really super interesting. I think it's going to take some time, but I do think that it's not going to replace everything we do.
Yeah. Random tangent. Do you remember the name of the professor who taught you that real estate course in the hotel school?
If you said it, maybe I would. I can't. I would make up a name.
Yeah, that's okay. The person who asked the question also went to the hotel school, and I think, they're writing Eister. Does that ring a bell?
It doesn't, but I have to tell you guys, I'm not great with names, particularly. I'm good with faces, not the best with names.
That's okay. Let's see here. So the Northeast housing market has been on a tear outside of the cities. I mean, I can only tell you in Ithaca, for example, you know this. I mean, a house goes on the market and it's got 12 offers in 2 hours. I mean, it's like insane. Yeah. So I know you probably don't do much on the consumer, like non-commercial side, but any insights into how this housing market is going to fare?
Well, I mean, I'm not a residential expert.
I know.
Multifamily and commercial, but I'll give you my personal opinion.
Yeah.
I mean, it's a low interest rate environment, right? And so when you have a low interest rate environment and access to capital, i.e. mortgages is fairly good, not free, then you're going to see more demand for housing. In addition, I think, and so people will do the analysis as, is it, more expensive for me to rent versus buy? And so that always sort of fuels at least the baseline of it, in my view.
Yep.
But then I also think that it has to do with, people feeling like, in COVID, in downturns or shocks, I'll call them disruptors, you begin to ask yourself, what do I want? Like, I've been doing that. I told you, Zach, that I'm in Martha's Vineyard. I'm working here, probably for the summer, go back and forth to New York a couple of times. But quality of life, and actually looking at, the places where housing is on fire are places where people feel like they can have a better quality of life, and that the tax basis is more affordable. We're watching the migration. If you look, you're going to see those two things are fueling the migration away from some of the more expensive cities. Now, the question remains, and I don't know the answer, is that permanent, or do people come back into the city? Because now in New York, you can buy condos and other co-ops probably at prices that we haven't seen in a while, depending on the size, or the size of the transaction or size of the unit. So maybe people come back, right? So there's going to be a little bit of push, pull, tug, and then we have to see stabilization, right? We haven't seen that yet. So I think, what, as an investor, my job is to try to figure out how to get in front of those trends and and take, what we think are calculated bets on places where we really feel good about whatever trends exist. But multifamily is definitely, on fire. Residential's on fire. It's literally, when you get 18 bids, that means that people have liquidity. So that's interesting. Stock market is up. Our 401ks are up. People have access to capital. I mean, I think those are all the, just things that pop into my mind about it.
So let's go back to commercial real estate. What's your view on suburban shopping malls? What's going to happen to them?
Suburban shopping malls, particularly B malls, are really problematic. I see, it's not that what I see, it is happening where across the United States, they're closing. And I think there's a couple of reasons that have nothing to do with Amazon and e-commerce, I should say. I keep saying Amazon, e-commerce. We are over malled compared to other places in other countries, right? So we have too many malls. And so it's the whole thing that hopefully we all learned in business school, supply and demand.
Right, Econ 101.
It's Econ 101. And so I think that's the part. So in some respects, we're right sizing to what makes sense for this country. But then also, I think there's an opportunity for the malls that are, really the A malls, the malls that are well located real estate and that are destination driven. They're becoming more destination places. We all want things to do, right? So I don't think all malls are dead, but I do think that there is going to be a transformation of what happens, what we do at a mall. We're going to have probably a lot more entertainment. Whereas years ago, we wanted more big anchor tenants because we liked the stability of that income. Well, because of the change in how we shop for things. I mean, I buy things all the time online. I don't necessarily go to the mall so much for that, but I might go to the mall because I want to go to a great restaurant or go to the movies or go to, to whatever, destination has been created. I mean, in New Jersey, there's even a mall that has like a ski slope in it. Like, I mean, it's amazing what's happening and what's coming. So I do think that there'll be a transformation. I also think that these malls are on prime real estate. And I always talk about what's the land worth? What can you do with that land? How can you repurpose it? And I think there's a lot of ideas going, or circling around how you can repurpose malls.
Right.
And because we have other property types that we need like multifamily.
Right. But just to sort of summarize that, the downward trend in malls, you think in suburban, you call them B malls, so the ones that aren't in prime spots, was already started, and COVID just accelerated that.
Yes,
and COVID, and you guys online accelerated it.
You guys have one in Ithaca, right? I mean, I went to
our mall's terrible.
Pyramid Mall or whatever that mall is. We actually did a case study with the high school class when we actually had them in Ithaca, and we took them to the mall. We didn't even tell them that they were doing a case. So we just took them case study on that asset. We actually just took these high school kids to the mall, and they were like, "What is this?" Because there were a bunch of stores that were closed, and so I think that COVID was an accelerator to something that was already in process.
Yeah.
But I think that, and again, it has to do with the health of the tenants. When you think about commercial real estate, it's your, the credit of your tenants is what, the tenants that occupy your space. So whatever the big box, JC Penney's, the Macy's, all those, depending on what their view is of their footprint, it's going to affect also the suburban malls,
Yeah.
whether they feel like it's justified.
Yeah.
So
We just got another interesting question. It
Sure.
says, can you talk a bit more about the mental strength needed to get from the business plan to receiving the funding from investor number 7 on your list?
yeah, I mean,
And the person, right, her name is Carol. She writes, I've been sitting on my business plan for a few years.
okay, well, Carol, get off of that business plan, girlfriend. No, it takes believing in yourself, and it takes believing that it's okay to not be perfect. I remember trying to just, when I was rejected, instead of circling and spiraling is the word I was looking for, getting, out of control, it made me more resilient. It made me try to figure out what could I refine. And it is hard, right? Because I don't know, I can't tell you exactly what I would have done if I got down to number 10. I would hope that I would have made the list of the next 10, right? That's what I would hope.
I mean, I have to interrupt. I mean, being successful by number 7 is actually pretty unusual.
Yeah, but still, that was a lot of, that's, when you're in the middle of it and you don't really know that, right? You're feeling like number 7, that's a series of no's right off the bat. That could actually, when you start something, imagine if you got 7 no's, right? That makes you think that, wow, maybe I'm not onto something. Because at that time I had to develop the conviction of character and belief in myself to say, I'm going to keep going. And so you're right. I do. And when I reflect, I say, wow, number 7 was probably not that bad.
You're lucky.
Right. And now today I have 17, investors, and we're raising capital, and that's part of the CEO's job. And it gets easier. In fact, after this meeting, I'm actually going before a public pension plan by Zoom to ask for, an allocation. So that, but that's, so you have to believe in your plan, Carol. You have to see the vision, and you can't let anything stop you.
And you have to believe in yourself.
Got to believe in yourself. Yes.
Absolutely. I tell students to say, it's like when a student asks me, how to start a company, I always think to myself, that student will never start a company. Like, because the students that actually want to start, they just sort of, I hate to say it, but they feel it a lot.
I agree.
And they have people that they've been looking up to. By the way, I'm going to talk to you after this, but I would love for you to get involved with our program, the Entrepreneurship at Cornell program, because I have a lot of students who have told me there's no one that looks like me. They're talking to the white guy. I'm almost older, right? But not.
We don't think we are. That's
yeah, okay. I know we don't act it, but it's getting to that age, and we really need more of you. We need more Tammys. So. Anyway,
I want more Tammys. Like, I'm literally, that's why I'm trying to invest with other folks that hopefully will be in the pipeline, because it is really not, I mean, just, it's abysmal, the pipeline right now, and we need to fix it.
Yeah. So I think we only have time for one more question. Actually, we have like 3 minutes left. So I want to just touch on this public company board. You're on a couple of public company boards. What inspired you to do it? Was it just something that came up? Were you asked by someone to join? I'm curious.
Yeah, well, for me, every one of my public boards, and I've had a total of 3. One of the boards, we actually took the company private and sold it, created tremendous value for shareholders. All 3 were through relationships. And that's a lot of, to me, 70%, I read a statistic somewhere, of board placements are through, people who are on the board, who know someone, or, and can refer you or vouch for you, or someone directly on the board, and maybe 30% come from the actual, search firms. So for me, board service is amazing as a CEO, because I'm cross-pollinating with other leaders across the nation and understanding best practices. I'm a life learner, so I love learning, right? So it's great and I can apply everything that I'm doing to my current role. I also think that I am hopefully adding value, because the job of a board member is to create value for shareholders and then also stakeholders, right? And so
Right.
I'm honored to be the chair of Matt Calley's board, and I've been told that I'm the first African American board chair of a New York Stock Exchange listed REIT over 100 million, which
Yeah, it's
African.
fabulous.
So yeah, so that's great. And so I think it's my duty to serve in that regard, to make the way for more people like me. I also think that it's important for African American and other minorities to be in the boardroom so we can affect change. Because
Right.
guess what? I am working to make sure that our boards are diverse, are diverse, and that all things are looked at the company, because I think that diverse teams are better for everyone. I think it leads to outperformance. I think there's study after study that shows that. And so if we want to find alpha and we want to create value, then it starts with the team and the people. And so getting in the boardrooms, change starts at the top. So that's why I'm there.
Yeah, and I can imagine with the push to diversity and people are finally seeing the need for it. I bet you're being asked a lot. I mean, I can imagine, because there aren't that many people like you that have your type of experience.
Yeah, I am, but you know what? I am sharing those inquiries. If they want Tammy, then I'm able to get them, Cindy or someone
Yeah,
else who I know in my network. So I say keep them coming, because then I will endeavor to help find someone who looks like me
yeah,
for that board
yeah.
seat.
Well, it's perfect. Well, guess what? That hour flew by.
Wow, it flew by.
So
That was so much
yeah,
fun, Zach.
it was
Thank
actually
you.
great. I really do look forward to our further conversation. I'll email
Absolutely.
you after.
Okay.
But just for the audience, so as a reminder, our event today is definitely being recorded. We'll put the links in the chat as to where you can see it or share it with your friends on both the CEN site and the E@C YouTube channel. We're also doing a double this month. Usually we have one webinar a month. We're actually doing another one on June 22nd with John No, who is the founder of Rokon. I just talked to John yesterday in prep. He's a really, really interesting story. So you'll see advertisements about that as well. And until then, have a wonderful bunch of nice days coming up as we lead into summer. And as another quick reminder, when we end the webinar, it just goes off really quickly. So no time to say goodbye to anybody, but I'll say goodbye to Tammy.
Bye-bye.
So
Thank you all for
yeah, it was
having
great.
me.
It
Happy
was super,
summer. See ya.
super having you. And I'll be back in touch. So everyone else, have a great rest of your day. Thanks a lot for joining us, and we'll see you soon. Okay, bye-bye.